Thank you for tuning in. If you missed the first part where I went through the first 5 stocks in my portfolio, feel free to have a glance at it. This is the continuation. This is part 2. The next 5 stocks that I actually and really hold in my portfolio at the moment. I am definitely leaning into growth stocks, some fairly high risk even. But given my age and my ability to handle short-term pain, I see no good reason why I should be running into the sweet embrace of dividend stocks only. Don't get me wrong, I respect those who do, actually. There's nothing inherently wrong with a rock-solid dividend portfolio and a 13-14% ROI. However, I personally prefer the allure of a higher upside. And as long as you don't get too concentrated in just a few stocks, I think the risk management side of things is not that tricky to get right, actually. Anyways, enough chit chat. Let's crack on, yeah, with numero uno. CRISPR Therapeutics. CRISPR is a pioneer in gene editing, working on treatments for diseases like sickle cell and cancer. They've already received FDA approval for their very first therapy, a pretty big deal if you ask me. And if gene editing were to scale, this company, CRISPR, could be at the very center of it. But as we all know, biotech is very risky in general. Regulatory setbacks or failed trials could crush this stock. NIO. NIO is a premium electric vehicle brand in China with a strong design and a loyal customer base. They have a battery swap model, which is pretty unique. It stands out among its peers and could certainly be a long-term advantage. And if Tesla stumbles or continues to stumble, some might say, NIO could gain serious market share. However, the company is still unprofitable and macro conditions in China are uncertain. Onestream. This is a new one for me, dipping my toes a little bit in Onestream, which operates in a focused audio tech niche, quietly building a loyal user base. It's a small company with room to grow if it executes well. And niche players, they can surprise when or if they get traction. So that's the upside. The risk, well, competition from bigger brands is always a threat, of course, especially for a company with limited resources. QuantumScape. QuantumScape is developing next-generation solid-state batteries. That's what they do. That's their mission. If successful,
in its venture, it could reshape the electric vehicle industry. They have a partnership with the German giant Volkswagen, giving them what we could call industry backing, a definite plus. That being said, QuantumScape does not have revenue yet, and it's unclear when or if the tech will truly scale. XPeng. Staying with the EV space, XPeng produces pretty tech-forward EVs and is expanding into Europe and beyond. Their in-house autonomous driving software is a key differentiator in an otherwise very tough market. With government support, XPeng should be well positioned for growth. But as I just mentioned, and as we all have heard of late, the EV competition in China is brutally intense and margins are getting squeezed.